Sent, when was it? On a Sunday.
On a Sunday night, yeah.
Did you manage to go through that one just for interest sake?
Yeah, but I went through it on Wednesday.
Oh, it had already played out. If you see most of the pairs,
yes.
Yeah, we're gonna just go through it once we finished this chapter here that we are gonna be talking about. So we're gonna go through that analysis so that you can see how it panned out and how those levels that I marked, why were they so of interest sake? Because those levels, they played out perfectly. Look at gold, Euro USD, dollar index, AUD USD, NZ USD, they all played out except USD CHF. It didn't reach our level.
Okay, yeah.
Yeah. So today we're gonna have like a 30-minute time that we have, because I'm sure you've heard of trend lines, bull and bear channels. You have heard about them.
Yes.
Right. We are going to be using these mostly on our supply and demand concept. They are like the signs that we look out for in the market when we look at price action. For example, say price is approaching a strong supply area or a strong demand area. That's when the trend lines, the bull and the bear channels come into play.
Okay. To check up something if it's gonna be a continuous downtrend or uptrend thing, yeah.
Yes. So we're gonna be using these characteristics, the trend lines or the channels, mainly on strong areas of supply and demand. It's not just like anywhere on the price chart that we look to use them, but probably like from a weekly time frame or a daily time frame. That's where we look at the interesting trend lines and the interesting bull and bear channels. So you can focus on them on lower time frames if you're going to be scalping, but in most cases they don't really work when you're scalping. But on a higher time frame concept, say a trend line is being breached on a 4-hour or a daily time frame, it's much better on those time frames because in most cases they tend to work well.
Yeah. Okay, sure.
Yeah. So now right, you can see my screen, right?
Yes, sir.
Yeah. So trend lines are a form of support and resistance. They are more or less the same. Only difference is that trend lines are plotted diagonally on the chart. You can see the chart on your left. We've got we've got the bearish trend line. Price is forming higher high, higher low, lower low, higher low, lower low, and then when it breaches the bearish trend line, you see where number 4 is in particular.
Yes.
Right. Number 4 becomes of interest. Say, for instance, this is a daily time frame. Number 4 becomes of interest when price retraces back to the same zone. That's where we look for opportunities to go higher. That's in a bearish trend line. And if you look on your right, we've got the bullish trend line. Market will be forming higher highs, higher low, higher highs, higher low. So market is in an uptrend, basically. But now, let's say it reaches number 4. That's a strong area of supply. You can clearly see number 4.
Yes.
Yeah, it's a strong area of supply. Market tends to turn when it reaches number 4. So now, in conjunction with this trend line here, when market breaches number 4 and pushes to the downside, the moment it retraces, markets always retraces, but it's when do you have to take the trade from the retest? When it reaches the trend line, when it tries to test the trend line or breaches the trend line, that's when you take the trades to go short, because already our bullish momentum has been breached, which means price is no longer looking to go higher, but it will try to entice people to keep going longer, and then it crashes to the downside.
Okay.
Yeah.
Okay.
So these two setups, they are very powerful. And it has to be like something on your fingertips. Each time you are looking at a market, say we've got a weekly bearish order flow, that means market is going to the downside. The moment you see that market testing a strong demand area, if we are in a bearish order flow, we look for demand areas to go to the upside. If we are in a bullish weekly order flow, you look for strong supply areas to go to the downside. Yeah. So these two setups, they are very important for you to know, like on your fingertips. It's something that has to be like 1+1 of trading.
Okay.
Yeah. Okay, let me clear up this here. Right. In this section, I'm going to show you how to draw bull and bear channels, popularly known as flags. This section of the course will teach you how to master the art of trading using channels, either bull or bear, effectively in conjunction with supply and demand areas, and also support and resistance. A channel is only of any use to use if it terminates at an important area to trade, such as a supply or a demand zone. Remember, don't even entertain price action which is not giving you signs that it's approaching a very strong area in the market. You don't have to entertain those type of setups, because those are the setups that make you lose. So always entertain price action which is rallying towards a certain
demand.
a certain
demand or supply zone,
or a supply zone. A bull channel forms after price spike that peaks out and slowly forms a short-term reversal downtrend. The starting points for the trend lines. The starting points for the trend lines should connect the highest high that's in an upper trend line and the highest low in a lower trend line. Let me give you an example of this. This is a bull channel. Let me go to the bull channel screen so that you can see. Right, you see this is a bull channel. We've got the dotted lines. This top one, that's our trend line resistance. The bottom, that's our trend line support. So in a bull channel, market is naturally in a uptrend, right? So now when it starts ranging, when it starts ranging, then you get a lower low, then a higher high, a lower low, higher high. Yeah. The moment it breaches the trend line resistance and close above, then we are back here. Let me go back. Then we are back here. Remember number 5 on the, then market has to go to the upside.
Bullish now.
Yeah, it has to continue in a bullish momentum. So that's a bull channel. A bear channel forms after a large price collapse that attempts a short-term uptrend. These are the opposite of bull flags. A flag and the channel, they represent the same thing. It's just like how you relate to them. The trend lines connect. The trend lines connect the flags and highs starting from the bottom. The trend lines should maintain a parallel distance between each other until price collapsed back under the lower trend line. This triggers longs to unload their positions as panic sets in when the price falls through the lowest low. You see, most people will be like, oh, market is now going all the way down. Yet it's just a panic in the market. Yeah. This triggers the bear flag breakdown and subsequent resumption of the next leg of the prior downtrend as price make new lows. So a bear channel. This is basically the illustration of a bear channel. During a downtrend, normally after an impulsive move, the bear channel presents a chance for the market to regroup before continuing the down momentum. I'm sure you have noticed when you look at price, which is moving in a strong bearish order flow, like market is trending to the downside. It's not a case to say it's going to keep going without moving to the upside a bit before continuing with the bearish move. So market can be strong bearish on a downtrend, but probably maybe on an H1 or H4 chart, you can see a minor uptrend. You see, because market
so it's like a breathing space.
Yes, market has to breathe. It's not always that market has to crash. If you look at gold, for instance, like gold this week, is it gold? No, AUD USD and NZ USD. I'm gonna show you when we are to the charts. The same exact thing happened. There was a bear flag. I think it's on an H4 chart. It started on a Monday. Then Tuesday, Wednesday, market was just crashing. So I'm gonna show you that example of a bear flag on AUD USD and NZ USD. So it's like market has to breathe. Yeah, market has to breathe. It can't just keep going, crashing, tumbling down in a bear flag. So that moment when market is breathing, that's when we look for opportunities. You see, you basically know that.
Yes.
Yeah, you basically know that on a weekly order flow, market is going to the downside, but then you see a range forming, right? On an H4 chart, market trying to go to the upside. The moment it breaches 2 or 3 of the lows that are formed during that range, then you've got a good setup to continue to the downside.
Downside.
Yeah. So this bear flag, right? Let me clear up. Let me just give you one hint that you need to understand. Right. Supply and demand. When market is trending to the downside, the moment it pauses, say in a range, which is let's say a bear flag, the moment it pauses and then continues to the downside, you see this area that it paused. You see that area?
Yes.
That area becomes a new supply zone. It becomes a new supply zone.
All right.
Yeah. So the moment you see price breaking the trend line support, if it happens that prices tries to go to the upside, this area now becomes your key area for shorting the market because there's supply here. You understand that part?
Yeah, I'm getting it. Yeah.
So you must take note, especially if it happens that market is trending on a daily time frame, like Monday, Tuesday, market is falling. And then you see Wednesday, there's like a pause in the market. And then Thursday and Friday, a continuation of the downtrend. The moment you see the coming week, Tuesday or Wednesday, it tests that pause which happened the previous week. You take the trade in the direction of the trend. So this is the illustration.
Okay.
This is the illustration of a bear flag. Now let's see what it looks like on a chart. This is what it looks like. This was what? Euro USD, if I'm not mistaken. Yeah. This is Euro USD. Time frame was 4 hour. This was a 4-hour time frame on Euro USD. You can clearly see that market was trending, going higher. We're having higher low, higher low. Yeah, market is going to the upside. Then it hit it formed a supply here. It couldn't breach this price level. You see, so this is a strong supply area in the market. Why? Because price moved to the upside instantly. It couldn't hang around. It come back. You see, it's a 4 hour.
Yes.
This move is only one candle in a 4 hour. That's a strong supply area. Now, look what happened. It started forming. It dropped, came to the minor demand area, then started ranging, going to the upside, comes down, to the upside, comes down. Now, the moment it breaches the lower trend line support, market tumble. So your entry would have probably been here. You see? Then this would have been the, you see?
Tips in the bag.
Yeah. For some people that are aggressive, me personally, the moment it came back to this upper trend line, that's where I would have taken the trade. You see here?
Yes.
Reason being that we've got,
When you tested that.
yeah, you see, we've got this supply here. So market would have struggled to, market would have struggled to break this level. So bear channel and bull channels, they are very strong patterns in the market to trade from, especially when you become good at it. Sorry, when you're so good in noticing them. So it's not a case to say no, you have to be on the charts to see this happening. No, you can say, okay, after like 8 hours, 2 candles would have formed. Let me see if my trend line support is being tested. You see? So it's not a case to say no, you have to.
Yeah.
But if you're gonna trade on a 15-minute, then you need to be on the what? On the charts to see.
on the screen, yeah.
Which becomes difficult, you see. It becomes difficult now to trade. Yes, there is good money, but once you know what you're doing, you see, that's the thing. Once you know what you're doing,
Yes.
you can be looking at these patterns on a 15-minute, 30-minute time. But if you look at them from a higher time frame, they tend to pay more. You get more pips from a higher time frame perspective. So this is a bear channel illustration. Now let's go look at a bull channel. Right. Right, we've got a bullish flag here. A bull channel. During an uptrend, right? So you must always know that you look for a bear flag in a downtrend, a bull flag in an uptrend. So a bull flag is like a fake signal.
Okay.
It's like a fake signal. Because most people, they get trapped in a bull flag. Some they call them bull traps and bear traps. You see, because people.
That's the term.
Yeah. So most traders will be saying our market is now going to the downside. Yet its mission will be going to the upside. That's where price action becomes. Yeah, that's where price action becomes important. So in a bull flag, a bull channel presents a chance for the market to regroup, which is to breathe a bit before continuing with the uptrend. Normally, volume diminishes during the market pause. When volume decreases in price action, when volume decreases, that's when you get to see ranging markets. For our time frame, the Asian session normally is the ranging market because there's not much volume during the Asian session, and then rapidly expands prior to the continuation towards London Open. Have you ever noticed that by 7 morning, 8, 9, 10, market moves during that time? Remember, that's the time when London session starts, especially 9 a.m., 10 a.m. market.
Okay.
Yeah. So when there's no volume, then that's the time when you're supposed to be hunting your channels, your flags. When the market is a bit quiet, when it's breathing, that's when you get to hunt for these type of setups. You'll be like, let me see if NZUSD has got something going on a daily or on a 4 hour, then you get to look for the setups, because with the way you do your time frame, Cosmos, when you're going to work, it's not going to be always that you have to be on the chart because you are busy at work. So you have to, you have to design, I don't know, you have to come up with a plan to say, no, during this time, when I get home, 9 p.m., 10 p.m., let me look for a setup, or let me look for a chart or an asset which I can follow to say, no, the moment price reaches there, or let me look for the assets that Ivan has sent. Like on Sunday, this asset that I've sent. So you'd have been just monitoring to say, okay, Ivan mentioned 97 level on dollar index. The moment you see dollar index on 97, then you know what to do on Euro USD, gold, AUD USD, NZ USD. So it's a case of monitoring one asset, which is going to affect 3 or 4 assets of your portfolio. So your timing is going to be like very important, since you're not always free to be on the charts.
The charts, yeah.
So in regards to a bull channel, it slowly forms a short-term reversal downtrend. Bull channels are characterized by lower highs and lower lows. As you can see in this illustration here, we've got the trend line resistance, which is to the upside. These are the lower highs. Then you've got the trend line support, which has got the lower lows. The moment you see 1, 2, 3, then you anticipate something to happen here if your momentum is strong to the upside. You see?
Upside.
Yeah. If price does not break here, the upper trend line, the trend line resistance, if price doesn't break, then you wait, because it's gonna come down and do the same thing before it shoots to the upside.
Okay.
Yeah. So now
it might take a while. It might take a while ranging.
Yeah, it now depends with the time frame that you are monitoring the channel from. Let's say this is a daily time frame. You see, let's say this is a daily time frame. You're gonna wait for quite a while. You see, if it's a H4 time frame now, if it's a H4 or H1 time frame, the chances are gonna be very high, because market can move. You see, one candle can move from one trend line resistance to the next trend line resistance. Yeah. But on a daily time frame, that's more of swing trading. You're going to have to be patient with the price. But once you get it right on a daily time frame, my friend, the possibilities there, they are endless. You see? So
yeah, that's true. I can see with you.
Yeah.
I'm saying I can see with you. Possibilities are endless for you.
Right. So let's see what this looks like on an MT4 chart. Right. You can clearly see, I can't remember which chart I took this example from, but it's an H4 time frame, that much I know. Market was moving to the upside, right? And then it hit a strong support area, this area here. And then started lower low, higher low, lower low, higher low, lower low, higher low. Look what the market did here, especially here. Right. Let me erase here. Let me clear this up a bit. Market broke up, but it was not trending that much. You see, market was ranging.
Yeah.
Then look at this big bearish candle here. It came back to test.
Okay.
Yeah. It went to test the trend line. That moment now, that's when you're supposed to load your long position, because there's no way it's going to come back into this channel again. Then look what happened after. Market took off. You see?
Yeah.
The moment you see 4 or 5 candles after market has retested the trend line, and you see the next 4 or 5 candles, say on an H4 chart, moving to the upside, then you're good to go. All you have to do is follow the price. Next candle close, you move your stop loss, you trail your price. You see, so by the time markets reaches here, if your entry was here, it means your stop loss is below here. By the time market reaches here, your stop loss will be here. You see, so you are guaranteed that even market retraces, you're not going to lose money. You're actually making money.
All right. Okay.
So this setup here, especially this guy, this is very important. The moment you see it ranging like this, expect a retest of the channel. But normally, under normal circumstance, when it breaks a trend line, see like this trend line resistance, the blue line to the top side, normally it should break it.
Yes.
Yeah. Normally it breaks it in such a way that the candle is going to shoot, then it will close above here. Then market always continue to the upside. But when it ranges like
Outside.
this, when it ranges like this, it means there was no volume. Normally, when you see this, even me, when I see this, I would even tell you that no, market is going to shoot down to the downside, test the trend line resistance again before it continues in the original uptrend. You see, because there's liquidity here. There's people who would have gone long and they put their stops below the trend line. You see, so those people, price will come and you can see this bullish candle here, the first bullish candle after the red one, it spiked into the trend line and then shoot up. So that was a liquidity trigger. There was a lot of people with stop losses here.
Yeah, it's making sense.
So those people with stop losses just below the trend line, because those people, they are anticipating the right direction, but their stop losses are just at the wrong place. And now market does see those stop losses, you see? A stop loss is liquidity. Yeah. A stop loss is money to someone, you see, to the market maker. That's money. They will come back for those stop losses before they eventually trigger the uptrend. But they cannot come back for stop losses that are below here. You see? They can't.
Yes.
Yeah. Because it's too far. Those stop losses are way, way to the downside. It would take like, I'm not sure what kind of a fundamental for the market to spike to the downside of here and then shoot up. No, that's not going to happen. It doesn't usually happen. But with the market, anything is possible, you see? So now it's important that you look at what the price action is doing prior to the break of that upper trend line in a bull channel. You see this, a good example, this bearish flag, the one that spikes back to the trend line.
Yes.
Now tell me how many people were going short when they see this market, this big red candle. That's a 4-hour time frame. A lot of people would have been selling there, you see?
Yeah, they will anticipate some shorts there.
Yeah, a lot of people would have been selling. And the moment they load short positions, that's liquidity. Market will never come back. You see? Because if market comes back into the channel, it means the people that are selling, they are making pips. You see? Retailers will be getting rich.
Okay.
Yeah. Let me show you. You see there? Obviously, my line is not perfect, but I'm sure you can see what I'm talking about. From that bearish candle, if I draw horizontal, you see, there's people who would have shorted here, people would have shorted here, people would have shorted here. The same thing, people would have shorted here.
Okay. On that side is, yeah.
So market was enticing people to short. They load more shorts, load more shorts, load more shorts, but eventually it triggers. The institutions came in. They bought the asset and market went to the upside. Now, all those people that were in short positions, they lose. So it's very important.
Yeah.
It's very important to read the market in a proper way, in such a way that always try to look for the most difficult thing that you can say, no, this cannot happen. You see, the moment you like, there's too much, the price is dropping here, right? Momentum is bearish. No, I'm gonna sell. No, look at, okay, what if I buy? What could happen if I buy? Because already you would have identified this channel here. You see, that's your trigger.
Yes.
Now. So that means you have already erased going short on that asset. All you do is you're looking for longs. You're looking for longs. You see? Because
yes.
The moment you say, no, I'm going short, then you are trapped. You lose your equity. So they do take time to master. But for some people, it takes short time. But for most people, it takes time to master channels, but they are very powerful, especially when they form at a strong area of supply and demand. They are very powerful. They like here, price terminated at a strong demand area. Price was shooting to the upside. Price terminated, then it shoot to the upside. So they are very powerful. Yeah, they are very powerful patterns in the market, and we are going to be using these mostly. Yeah, at times we are going to look at head and shoulders, but those ones, they're not that convincing with my strategy because there's too much fake outs in head and shoulders. But channels, they are very powerful. Right. Before we go to the charts, the MT4 chart, do you have any questions regarding the bull channel or the bear channel?
Not now. Not now.
Not now. Okay. Because this topic here, I'm going to be sending you like charts, which I'm going to ask you to plot bear channels and bull channels because it's more of practical from now on. Because I've already introduced you to supply and demand. So it's now about perfecting what we look for in regards to trading supply and demand. So now I'm going to show you a good example. A good example of right. I need to share with you the screen now. New share. Right. Can you see the MT4 chart?
Yes, yes.
No, I need to share it again. Right. I'm sure now you can see the MT4 chart. Right. I'm going to go to AUD USD. Right. Let me put my billing template. Once we are done, you must remind me to give you the template. You see this template on my screen?
Yes.
After our 4th or 5th lesson, you must remind me so that I can give you that template. Because it does,
okay, sir.
Yeah, it makes things easier, especially if you're still starting. Right. I'm going to give you an example of a good example of a bear channel. Right. If you look on ADUSD, right, we've got price was moving from a strong supply area. You see, market
going down.
Yeah, going to the downside. Market tumbled, but we've got this guy here in between the two bearish flags. You see that guy? That's Monday.
Yes.
That's a Monday candle. Right. Now I'm going to highlight it. Let me just move this away. I'm going to highlight the Monday candle. That's why I sent those trades. I think Monday afternoon, Tuesday morning, I can't remember. When I said, no, it's time to short now. Let me highlight that guy. Then I'm going to change him to a gray area. Silver is all right. Now I've highlighted part of our Monday and Tuesday trading. Now I'm gonna remember market is moving in a strong downtrend from a supply zone. Yeah, we've got Thursday and Friday. Market was shooting down. You see. So now we get Monday. Monday is a low volume trade day. Market doesn't really move that much. But if you look at that chart, the candle that I've highlighted, that's Monday's trading. So now I'm going to dive down to H1. Let me zoom out. Right. H1, that's our Monday trading. Let me put my daily indicator. There we go. Look what happened on a Monday. Right. Remember the gray area, that's our Monday's trading. Now we are on an H1 time frame. Look.
Okay.
You see? Now we are on a higher time frame. We are going to the downside, right? Market is
you
see, from a higher time frame, but now we have dived down to a H1 so that we can see the price action. Market is tumbling down on a higher time frame from a strong supply area. You see, a strong supply area. So look what happened on an H1 chart. Now I've highlighted, obviously my trend lines are not going to be perfect because it's illustration. Now I've put my trend lines on an H1. Now I'm going to go to a 30-minute time frame. Let me zoom out a bit. Okay. Right. Let me go there. Come on. Move away. Right. There we go. Let me zoom in. Right. Can you see what's happening there now? There's there's the channel. But the channel is more clear on a 30-minute and 1 hour time frame. So it means you'll be monitoring, say, the hour time frame. The moment market, okay, let me remove this gray shaded area of mine. Right. Now look what happened. Market was higher high, higher low, higher high, higher low, higher high, higher low. But here, market closed below the trend line. This price action is very important. There's indecisions there, you see? So you wouldn't have gone in. Yeah. You wouldn't have gone in on this candle. But now look what the price did. It retested the trend line again. See? Your trigger to short would have been the close of the last bullish candle. You see this candle that tested the trend line, it closed below. That's the trigger to go to the down.
Go short.
You see, it's very easy. You know, people make it easy. But once you know how to read this,
now you're making it easy.
You see, once you know how to read the structure of the market, what's happening? What are you looking for? AUDSD. What are you looking for? Okay, market is going to the downside, right? So what are we doing? Yeah. We're going to be looking for shorts. Now you start diving down. You see this, can you see this impulsive move here?
Yeah, there's 1, 2, 3, 4 candles. Yeah.
That's an impulsive move. Obviously, market is not going to just keep continuing with that. You see, it doesn't keep dropping like that. It has to breathe. There's your breathing part, right? And then it broke below, retest. We are going all the way to the downside. You see? So these things here, it's very easy. That's why I was like, I think in the group, getting 20, 50, 60 pips in the market per week should be standard. You see? If you really, if you really know what you're doing, 20 pips should be standard. 30 pips, 50 pips, 300 pips a week should be a standard, which is good enough for you to grow your equity. 300 pips is a lot, you see? But people, they want, I don't know, they want large, but 300 pips a week consistently, that can really have a big effect on your equity. So it's a case of perfecting your concept. Like, okay, I'm going to be doing this week. If that doesn't happen, then fair and fine. I'm not in the market. Always look to get in the market which is in your favor.
Okay, yeah.
Yeah. It's not just a case of saying, let me open the computer, let me look for trades now. That way you're not going to get anywhere. You won't get anywhere. Now look what happened after it broke that H1 trend line. Let me zoom out. Look what happened. This was,
yeah.
let me put the daily separators here. Look what happened. Monday, prior to Monday close, market tumbled. Tuesday, it was continuation up until Wednesday. You see, there was the,
yeah.
You see now how market reacted here. That's your trigger to exit the position. You see, that's the trigger to exit the position the moment you see strong moves to the upside. So you see, that's roughly about 70, 72 pips. But obviously, when you're trading, you'd have probably maybe got like 50, 40 pips from one trade. Tuesday close, you close your trades. You see, from one trade, which you don't even look. You see, you just set it, you let it go. So that's the good thing about a bear and a bull channel. Let me see if I can get. This was a channel, right? Now let me see if I can get another example of a bull channel. Let me see. We are looking for a market which is in an uptrend. We are looking for a market which is in an uptrend. Dollar. No, not dollar. Not dollar. Let me see this one here. This one doesn't have any good example. There's no good example here. There's no good example. What time frame is this? H4? No, there's no. Yeah. Unfortunately, I can't find any example for a bull channel. But if I do get one, I'll always share with you. Right. Remember CAD CHF?
Yes.
Yo, there's a car in the background that's revving.
Yeah, like to move outside. Like.
Right. Remember this chart that we highlighted? Remember this chart from our first lesson, which I highlighted, that gray area? I said strong supply. The magenta color, I said strong demand. Remember that this chart? I highlighted this chart in our first video. Are you there? Hello, Cosmos? Cosmos, are you there? Okay, no worries. I'm going to explain. Right. I did highlight this chart during our first lesson. Unfortunately, I can't hear you, but I'm going to explain. Right. If you see here, I did highlight this supply area to say if market tests this area, we are looking to short. Now look what happened. It did test. And can you hear me now?
Yeah, I can get you.
Yeah, you had gone away for a while there. Right. CAD CHF. I highlighted this pair during our first lesson, whereby I highlighted this strong supply and then I highlighted this strong demand area. Do you remember?
Yeah, I do.
You do remember, right? But when we
Yes.
did that, there's like this candle and this candle and the rest, they were all not there. This is the price action that is happening now after. Right. I did highlight that if market retest the gray shaded area, we'll be looking for shorts. Remember, this is a daily time. Yeah, this is a daily time frame. So that's a lot of pips there. So now this was Monday, if I'm not mistaken. This is Friday, Thursday, Wednesday, Tuesday. Yeah. That bullish candle which tested the supply area, obvious, it didn't touch, you see? So most people wouldn't have gone in. Yeah. It didn't touch the area. So for those who are conservative, they're not like risk takers. They wouldn't have traded here. You see? But for those people, for those people who take risk, the moment they see this type of rejection, you see, higher prices are getting rejected. That's the trigger to go to the downside, because it means this supply area has stood its ground. It has refused to be broken or touched. So the supply area, it means sellers, they look to come back. They'll be loading their shorts, sellers, on that area in such a way that the buyers, they can't control the market. So market tumbles to the downside.
Right.
Yeah. Now I'm going to zoom in on the demand area. Where am I? Anoint. This rectangle, the magenta color that I highlighted, I drew this candle. I didn't close this chart. I said I'm going to keep it because I knew we were going to get something in this. Now, let me zoom in. Then you can see exactly what I'm talking about. Right. Well, remember I mentioned this bearish flag between the two bull candles, that it's a strong area of
it's going to be a zone there.
Yeah, when price comes back to that area, then you look for opportunities to the upside. Now, if you go to a lower time frame, yes, it's not much, but it's a definite trade. You see? Remember, we are coming off from the gray area. Every time the market came into the demand area, yes, of course, here it spiked all the way, but that was the first test. You see, market spiked, it cleared all the lows, and then it shoot up. There you go, 25 pips. It came back again, you see, into the same demand area. Market came back again here. It shoot up. There you go, 39 pips. Obviously, you won't get 39 pips. You get maybe like 28, 30 pips. You see, right now, market is back again into the same
again.
You see, and this is happening like after a long period of time. You can see that this is what, 6 o'clock. This is like the next day, 3 o'clock. You see?
Yeah.
Market tested 6 o'clock. That's London close. It went to the upside during the New York session. Same thing happens again. Again, same thing happens. New York open, 3 o'clock. Same thing happens. CAD CHF shoot to the upside, 33 pips. Now, New York is closing now. Look what's happening. The market is ranging, right? The moment you see that price action, which has been happening the past, this is what, H1. We've got 1, 2, 3, 4, 5, 6 hours. The market is just ranging.
Yes.
That day is not good price action. You need to wait. That kind of price action is not good, especially when we are here. You see, we need we need to see price action which is like this. Let me highlight for you. Let me highlight. When it's in a zone, let me highlight. You see here. You see here.
Yes.
Market didn't hang around. You see? Market did not hang around. A clear, good definition of supply and demand. Market does not stay in that zone for a long time. It goes there, moves away. So now the moment it starts hanging around here, probably it's also because it's a Friday, you see? Because it's a Friday.
Oh, okay. Yeah.
Liquidity is now low. Now it's already almost 10 o'clock. Liquidity is now very low. That's why you get to see this. But come Monday, it's going to be interesting now to see the price action for Monday. You see? So the price action
Yes.
for Monday is going to be interesting because it can either rally to the upside, then it crashes. And the moment it rallies to the upside, you see here, there's good opportunity to go to the downside.
Downside.
You see, because it will be the second time that it's testing this supply area. You see, it will be the second time it's bound to hold to the downside. But now, if it breaks now, from here it goes to the down. Then you are looking at this. Look at the bottom left there. You're looking at this level here. You see, as your next target. Your next target to look for long positions. You see, so reading the structure of the market is very important because it can help you in getting clues of what really the market wants to do. That's why I highlighted CAD CHF in our first lesson, because I knew when price comes back to that magenta rectangle there, it's gonna return to the upside. Now that's already two opportunities from one asset that you would have got. You see, 25 pips on the first, or maybe 28, 30 pips on the next. That's already 50 pips on one asset, which is good return. See? That is a very good return. And for people who've got large equities in their accounts, say you are trading an account maybe with $1,000 or $2,000 with a leverage of 1:500. The moment you open a position with a lot size of 0.5, that's $5 a pip, 20 pips, 30 pips, $100, $150. That's already $250 on one asset. You see?
Okay, yeah. I mean, the homework you sent on the group, yeah.
It does, yeah, of course. You know the thing. What I've really learned, Cosmos. Most people, they come in this industry with the wrong mentality. The moment you have, it's just that are you my friend on Facebook?
Yes, yeah.
Yeah, I think there's a status that I put on Facebook and on the page to say, the moment you trade with things on your mind that need money, oh, I need money for this, I need money for that, I need money for that, you're not gonna progress.
I do. It won't come out.
Yeah, it's not gonna come out. Yes, everyone has got needs. You see, we all have things that we have to sort out. But with Forex, the moment you start having those kind of thoughts when you're on the charts, that's a bad move. That's a recipe for failure. So try to be always free up the mind, have an open mind when you look at a chart. You see, okay, Ivan said we are looking at USD/JPY, right? Okay, Japanese yen always opens the first, first before gold opens. What happens when the Japanese yen is rallying? Gold goes to the other side, right? So on a Sunday, USD/JPY opens at 11 o'clock. Gold is going to open after 12. So you've got a 1 hour period to see what the yen is doing and anticipate what the gold could also do. You see, it's those type of things that have to get stuck in your brain, like 1 + 1. Eventually, it has to be like that. Because it's like you ask me, oh, Ivan, can you look at this pair for me? Then I'll look at it. The moment I look at that chart, already I can see what the price action is doing. That's what you must aim for. Like CAD CHF has been a very good example. AUD USD has been a very good example of how you should be looking for trades in the market. You see?
Yes.
Yeah. Because it's not rocket science, Forex trading, but doesn't mean it's not rocket science, but it's not easy. That's why most people fail. They come in with the wrong mentality. So yeah, today we talked about trend lines, the bull channels, and the bear channels. You see, so I will be sending you some exercises. I'm just gonna like pick a pair to say, okay, Cosmos, can you highlight for me a bear channel on this asset? Highlight for me a bull channel. You see, from a certain time frame. Yeah, so that you get used. You see, like once in a day, or maybe twice or once in 2 days, once in a day. It depends now with your schedule. You just look at a chart. Try to read what the price is telling you. Read the story of the chart. Like, what is it saying? What is the chart telling me? You see, oh, CAD CHF, we have hit a strong supply on a weekly time frame, right? But market is going down. Where is it going down to? You look for a short-term demand level where it's testing. You see, like here, before we finish up, let me highlight this for you. Right. I think let me highlight this for you. Let me move this bit to the right. There we go. Now let me get rid of this guy here. Right. There's my LMT. CAD CHF was moving in a strong uptrend, right?
Yes.
It was going into a strong supply in a strong uptrend. Now look what happened here. It moved from this area, the one at the bottom right, moved sharply to the upside.
Yeah.
Then we had this pause. See this market pause here. Then when it broke above, it ranged, then it broke above. It went to the upside. This range, that's your most important area of interest. Forget this move to the upside. Forget that. That range, that's where everything is in this range. You see? That's where everything is. Forget about this because you'd have missed all this. Now look what happened when it came back to that range. You just wait for the right moment. You see? That's the most important thing. You wait for the right moment.
Yeah.
Yes, most people, they would have said, but Ivan, we missed all this to the upside. Yes, you missed it. But did you know it was going to move to the upside? No, you didn't know. You see? But when it gives you the signs of a demand level being formed in the market, short-term demand, price is moving higher on a higher level, then it created demand level. Then the moment price comes back, see, there's your, see, comes back again. There's your second trade. Easy. You get 2 clear setups, which you are guaranteed they're gonna give you
on one asset.
Yeah, on one asset. So now with a portfolio of 3-4 assets, you get 20 pips from each. That's 100 pips. That's not a bad return for me. For me, I'll take that all day and run away.
Yeah.
Because the market does not give back.
Yeah, that's true. That's true.
Right. Anyway, so I'm going to be sending you some chats probably tomorrow morning or tomorrow afternoon. Yeah, because I'm just waiting to see how the market is going to close at 11 before I can also do my weekly mentorship video. So I'm going to send you the charts, and then I'll be highlighting, like say, okay, I need you to highlight a bear flag there, a bull flag there. You see, we take it from
okay.
Yeah, we take it from there. Right. Do you have any questions before we wrap up?
Nah, nothing. I'll just go back to this video again. I think you're
Yeah.
gonna upload it again.
Yeah, I'm gonna upload it, and the notes, I'm gonna send you the notes also.
Okay, that'd be wonderful. Yeah.
Yeah, I'm gonna send you the notes also, and I'm gonna upload the video also. Because there's other 2 guys that are in Eastern. There's 2 guys in Eastern Cape, 2 guys in East London. So I have to upload for them. Hey, those guys, they don't even have time. So I told them I'm doing a lesson with another guy, and they said, no, you can upload the videos for us. So I have to upload for them also.
Okay. Is there anyone in PE?
You are the only one in PE.
Oh, okay.
Yeah, you are the only one in PE. All right, Cosmos. It was nice having a chat. So we're gonna see.
Okay.
I'll probably see Sunday afternoon. Oh, but Sunday there's Formula One. Sunday could be tricky. My favorite guy is on the racetrack, Lewis Hamilton. So that might be it.
Isn't it a qualifying one?
No, Sunday is the race. Qualifying is tomorrow.
Oh, okay.
Yeah, but Sunday we're gonna continue with our lesson. Yeah, Sunday
Okay.
we're gonna have like another hour session where we're gonna be talking about bullish and bearish continuation patterns. We're gonna be talking about these guys here. This guy on card CHF. This guy. That's a bullish.
Okay.
That's a bullish continuation pattern. So those are the guys that we are going to be talking about on Sunday.
All right. Thank you. Enjoy your night, sir.
All right, my brother. Have yourself a great evening and a lovely weekend.
I appreciate same to you, sir.
All right. Good night now.
Cheers.
Yes.